Welcome back to the podcast. I'm your host, Ankur Patel, and today I have a very special guest with me, Peter Hung, who's an investor at Illuminate Financial. Illuminate invests in B2B fintech and enterprise software. Peter, welcome to the show.
Hey, Ankur, really great to be here. Excited for this. I saw some friends on this podcast, so hopefully I can live up to their wisdom and their smarts.
Absolutely. So Peter, for the sake of our audience, very curious, what does it mean to be an investor for those that are not as oriented with the space?
I think that's a great question. For me, it's really working and partnering with the best founders and being able to provide and support them through the journey. It's not stock picking. It's really helping build the company, but from almost like the sidelines and almost like you're a coach through building that business there.
That's incredible. I think that's right. I think that's the difference between public market investors, where you just look at the numbers, invest, very arm's length, very transactional. Here, it seems like there is a little bit of rolling up your sleeves, right? Making introductions, weighing in on some critical decisions that companies are going through, really being part of that growth story. As you look at this landscape, obviously there's a lot happening, right? Especially with generative AI, there's a lot of companies getting funded, a lot of opportunities opening up. People describe it as the modern day gold rush. Curious, as you see so much volume across the opportunities that you pursue, how do you think about picking the winners or the companies to back versus which companies to potentially keep an eye on, but maybe not move on quite as quickly?
Yeah, it's a really good question. We're seeing such an incredible time in startups right now. I remember a couple of years ago when things really slowed down in the market, and right now we're seeing so many new companies come out in pre-seed, seed, Series A, Series Bs. And so for us, it's a fantastic time to be an investor. Also a fantastic time to be a founder as well. In generative AI, I feel like it's quite challenging. There's a lot of different companies that are slightly similar in flavor and maybe slightly different from one another. If you ever do a market map or look at one of these market maps, it's a massive list of different types of companies. And it's like, how do you choose the right one? How do you back the right one? It's an internal question that we have. But for me, and what's most important when I look at generative AI is that, the founder is able to see and have a vision for what the future looks like. There's a lot of companies that are building right now, which are the Wayne Gretzky quote, right? Which is, okay, they're going to where the puck is already at, but not where the puck is going. And it's a little cheesy to say that, but I think it's really true. Not enough founders are looking at the future. Like, if you solve this first step, what does it look like, and what does that enable next? And so we're looking for founders that have this grander vision for their products. Being able to speak to the competition really well as a founder is also another area where we particularly appreciate. It shows that you're in tune with the market, understands what's being built, and you have your specific wedge there as well. And then the last component there is in financial services itself is particularly unique here is that you have a specific relationship or specific wedge or network that you can lean on. And that's particularly what we do very well with founders that don't have that type of network necessarily. At Illuminate, we're backed by these large strategic financial institutions and financial infrastructure providers, and we can make introductions directly to people that are making decisions. So, and I can expand on that more as well.
No, that's incredible. I think it's really good insight into how you evaluate opportunities, how you invest in companies. I think what is interesting is generative AI startups. It's its own category right now. But I do wonder, as you look at your portfolio, even companies that have been around for some time, doesn't every tech company, let's say every fintech company, become an AI company, whether they are natively so or upgrading to some? I'm curious, is there a distinction, or will we have a distinction in the near future between AI startups versus the rest?
I think it's a really interesting question. I'm not sure if every company will start selling an AI-based product, But I think every company will leverage generative AI tools within their development process, within their sales and marketing process, and even internal operations as well. Really cool platforms like Cursor AI, we're starting to see developers see real value from. I think about a year ago, there's a lot of questions about, okay, well, ChatGPT is really cool, but I'm not sure how much it's going to change the game for me and my team and my organization. But now we're seeing people say, holy smokes, I can't develop or write code without Cursor anymore. I need to have this as a part of my workflow. And I'm really excited to see where that goes. AI is still, I think everything's shifting over to generative AI. I think it's going to happen at different speeds. Some workflows and processes might not want to leverage generative AI. For example, if it's very highly critical regulated industries like capital markets, it might be difficult or slower to move into a generative AI workflow. But I think like in 10 years down the road, if you're not leveraging generative AI, I think you'll be behind, and you're going to be trying to catch up with all the emerging startups that are building from generative AI from the onset. How are you seeing it from your side with multimodal?
Well, I think I tend to agree with a lot of things you're saying, which is I think all companies will use AI in its various forms in one way or another. Some might just be consumers. They're using AI to write code more quickly, do code review, and maybe have some design ideas on the graphics and the marketing front. And maybe they're using it to create content. So they might just be consumers. So they're getting the benefits of AI without delivering an AI product. Others will very much incorporate AI into their product. It may be part of their marketing. It may be a core differentiator for them to get a wedge and get into the market. But I do think that if you don't lean into artificial intelligence, you're going to miss a huge inflection point. And I don't think there is an option but to interact with it in some way, shape, or form. In the same way that the internet, right? If you didn't adopt the internet, if you didn't kind of make that leap, you weren't in business for long, right? You were forced into doing that. I think the other point, though, that you're mentioning here is that there are huge benefits of traditional machine learning, as we used to all call it. Now it's kind of in this big umbrella of AI as it becomes more of a mainstream topic. There are huge benefits of traditional machine learning. It is much more what I'd call deterministic, at least compared to generative AI. It's still a probabilistic model, but it's more deterministic. There are better guardrails. It trains on data, and you know exactly which data it trained on. And then you have things like confidence scores. Those are one of the missing critical things that I see in generative AI, where generative AI doesn't have confidence scores. So you don't know what the proxy is for confidence. And so you don't have a means to go and do things like straight through processing, which was a huge enabler for some of the gains that we saw with traditional ML, particularly around operational efficiency. So I think you will start seeing generative AI adopt where there are more guardrails, it's more narrowly scoped with things like confidence scores, with more explainability to tackle some of the workflows that you mentioned in capital markets. But I do think there's a huge area for traditional machine learning to play a part, particularly predictive models. And I think generative AI becomes yet another toolkit. Although, I think the buzz, of course, in mainstream, both on the consumer side and then buyers and investors, is on Gen AI, just because it's a newer kid on block. It's going to enable new features. But I think there's a huge purpose in traditional ML as well. Maybe following up on this topic here, Peter. I'm curious, when you think about how some of your LPs are thinking about opportunities here as you have some conversations. How are they approaching generative AI? Do you see some differences where some are leaning in much more aggressively and looking for opportunities to go and take advantage, whereas others maybe are more of a wait and see? I'm curious how that looks from your perspective.
I think it's a great question. Really excited to talk about this as well. So just to provide some background on us, we are backed by strategic LPs, 9 specifically, and on the banking side, we have JP Morgan, Citi, Barclays, Bank of New York, and Jefferies. On the financial infrastructure side, we have S&P Global, Euroclear, SGX, and Deutsche Börse. And to take a step back, it's insane looking at how much money these banks are spending on IT per year. I think there's a graph out there, and I can send it after this recording. JP Morgan spends something like 12% of their operating expenses on IT. Citi's 17%, Bank of New York, I think 13%. JP Morgan, I think in their annual report, they said they spent $14 billion in 2022 and over $15 billion in 2023. If you think about that, and it's not scientific, but think about the number of venture scale startups that can be built within that spend itself. Mm-hmm. Venture scale being $100 million of ARR. That's 150, right, within 2023 alone. There's so much spend and so much opportunity within these big banks to optimize costs. And it's really one thing that we're looking into. Enterprise software has been such a big focus for us this year. And I think we're at the most exciting time for startups ever. Generative AI has been this catalyst for financial services, for these big execs to really turn their head and spend not only professional time, but personal time to look into. And we spoke to one of the senior executives at one of these institutions, and he said that we want every head to have an AI win. And I've never heard of that before, because if you think about these traditionally like regulated enterprises, they need to look at companies that are at scale, that have proven themselves with other banks, and it's really a waiting game. Right now, it's the other motion happening, whereas they're much more proactive. They want to get ahead of their competitors. They want to work with startups earlier. So whether you're a pre-seed, seed, Series A company, which traditionally you weren't really given the light of day, now they're excited to meet these types of companies as well. So I'm curious how you found it building multimodal with the institutions that you've spoken with, and how those types of conversations have gone as well, Ankur.
Yeah, no, I think your perspective is really helpful, and I think it's something that we've seen as a software player selling into this audience. And I do think there are differences among the verticals. So you obviously have a really great footprint on banking with your LP base and finance more broadly. I think when we look at kind of the companies we speak to, definitely a lot of financial institutions. We also work with insurance companies, including carriers. They tend to move slower. Now, in some ways, like they might even have more areas that they need operational efficiency in, but they move slower. The adoption curve takes a little bit longer. And so we've really also focused on a lot of opportunities within financial institutions. And I think what you see right now, and I think goes back to what you said earlier, it's a phenomenal time to be building and investing and buying as well, but building, I think, from our lens, because generative AI levels the playing field. Now all of a sudden, the existing incumbents that had distribution were with those financial institutions. They don't have an advantage with their product, right? It's the brand actually might be outdated. Like when you think about what we do with robotics process automation being kind of the legacy way of making automation happen. Now we kind of expand that into different types of knowledge-based workflows. But RP doesn't have an advantage in this new game. The game's changed overnight, and so it creates huge opportunities for players like us to be able to go in very quickly, have higher product velocity, and then because some of these banks are a little bit more risk-taking when it comes to adoption of generative AI, they're leaning in earlier than they would otherwise, right? So you don't need large amounts of ARR or many logos to start having conversations. So you're in the door a lot quicker. You're close to them as they go and figure out which areas of the business do they want assistance with, especially after they've tried to go and build directly, perhaps by using the foundation models themselves, maybe with some hyperscalers. But then when the RFP process happens with external vendors, if you're close enough, you do have a shot on goal, right? And I think that's a unique thing about generative AI being this inflection point, leveling the playing field, and being such a large inflection point where some of these players aren't saying, let's wait and see, it's okay if I go and adopt this over the next 3 to 5 years. Instead, they're saying this has to happen now. Like this changes the game overnight. It's a huge opportunity for us to kind of reshape the market share that we have. So let's go lean in and let's work with some of the players that are closest to the technology because they have such great product velocity because that's the entire business that they're in. So a phenomenal time. I mean, these cycles are long, as you know, and I'm curious about that as well from your perspective. But the historical perspective around investing in startups as a fintech investor and doing enterprise software is these cycles are so insanely long, 18 to 24 months in some cases. And so as investors, that's the risk you have, I suppose, which is do these startups have the staying power, both financially, like in terms of capital, but then also in terms of their product and what they're building? How do you tell the winners or the emerging winners from the rest when you don't have enough metrics to draw upon because these cycles are so long? So how do you handle that as part of your framework when you're looking at companies in this space?
It's a really interesting question. I think that despite the catalyst of generative AI, sales cycles remain long selling to these large enterprises. You have to go through the POCs, and then you have to go through getting sponsorship from whoever is the use case and budget holder of that particular problem, and then like getting to production is a whole nother challenge in of itself. I think what we're seeing across all of our LPs right now is that there's a lot of like top of funnel traction. So as a startup founder, you're probably getting into a lot of POC processes. But how do you cut through and get through to the people that are actually going to make the decision to sign a production contract? We haven't seen a lot of that yet. And I think that part of that problem can be derived from speaking to people that might not actually be the decision maker in this case. And for us, that's why I think our model in this market is interesting, because we know the people that are heads of AI or the heads of wealth or payments and et cetera, the ones that are making the decisions. And so we can make those introductions directly to the decision makers on adopting software, partnering with software as well. As a founder, I think it's important that you work with people that have that network as either as an advisor or an investor that have the right relationships to cut through some of that noise. Because if you're going from manager to manager to manager and hoping that one of them is going to be a champion, and it ends up that, and you eventually find it, and you eventually find that champion leave or move on to a different department, and you have to start it again, it's very tiring. So it's very important that you try to get to the top as soon as you can.
Those are incredible insights, and it resonates with what we're seeing as well, which is I think when you talk to innovation teams or scouts, even corporate VCs sometimes that are doing some of the initial scouting themselves, you could get into conversations. Top of funnel's easier. You're into active POC processes. What's harder is really finding the person that's closer to the P&L, that's going to be that business champion, that's going to make a production subscription decision, and getting to that party first is hard. The second thing is when you get it to that party eventually, you do want to make sure you also have other champions in the org that could back channel to figure out where in the process is it stuck. Are there things I can do to get this thing unstuck? And it may happen in places that you don't even realize. For example, you might need certain data provisioned or certain instances provisioned. And so it might be stuck with the compliance team, not even the IT team. Maybe they've already gotten their ducks in a row. The compliance team is taking 3 months to do something. You just need that little internal push to say, hey, like, could we get this prioritized in the queue, right? So things like that, I think, make a huge difference. And so the more champions that you could find, and the higher up in the org that you go to really cut through some of the challenges, it really does help. And I think networks and partners, including what you do with some of the companies you work with, I'm sure that's a huge boon to those companies, because it helps kind of go and make the sales cycle a little bit easier, right? And that makes a huge difference. And so I think that's huge. The other thing is that you're right, champions do move. They leave, they switch firms or they switch departments. And so you cannot, when selling into enterprise, bet on one opportunity or one champion. You want to open up multiple fronts because one of them may not quite pan out the way you need to. And so you do need multiple shots on goal to really get in. Once you're in, once you've gone through vendor review, if you do a really great job with that first opportunity, it's easier to then land and expand. But that first in is really hard.
I think just a couple of things to add on to that component too is lean on your VCs, lean on your advisors to do a bit of hand-to-hand combat for you. Having a bit of external influence can be helpful in the process of winning a deal. And then secondly, which is less appreciated for earlier stage startups, is being prepared to sell to a bank. What that means is making sure that you're compliant, you have all the legal docs prepared, and when those legal turnovers come over, like you're ready to take that on and you're able to execute quickly. It's frustrating from the bank side when you're working with someone like a BNY that is the global custodian and handles 20% of the world's investable assets, and you're not ready to answer their questions or get back to them in time. And so when you decide to go enterprise, when you decide to sell into financial services, be prepared and have the right team to do so, and make sure that you're not the one that's holding the process back.
When you think about fintech today, and maybe we could take a quick step back, maybe to look at the broader set. There's consumer fintech and enterprise fintech or enterprise software in the fintech space. I'm curious, when you look at those two camps, it seems like the appetite or interest in consumer fintech has fallen quite a bit. Perhaps it's because of 2021 and some of the investments that were made there and what's happened in the aftermath. Whereas enterprise is kind of the sweet spot. It's what's hot. People find the sell cycles long when selling to enterprise, but they know that there is real demand, there's real budget, and you get in and it's stickier, so it's more predictable. There's more staying power. I'm curious what how you describe some of the opportunities you're seeing on the consumer versus enterprise side, and if any of that resonates.
I think it's a fantastic question, and I'll add in SMBs as a part of that segment as well. It's something that I've been going back and forth a lot on. We invest in B2B only, and we would entertain looking at B2B2C businesses. I think the number of consumer businesses or fintechs that have emerged over the years have definitely slowed down. Traditionally, just to provide some background, it was in a zero interest rate environment. You can spend as much money on customer acquisition as you want and then try to bring in customers that way. But it's no longer the case. Although rates are coming down, it's still expensive acquiring users. So where VCs have shifted is looking into enterprise. To your point, very sticky cycles or very sticky contracts if you land it. But I think there's also the challenge of these very long sales cycles. And what I'd like to add to that is product market fit. Mm-hmm. You can land a 1-year contract with a big bank and you might not have product market fit. Which is interesting to think about because, well, they signed a big contract with us. It's over 7 figures or, $500,000, whatever it is. It still might not be product market fit because you might not have that repeatability with other banks as well. And every bank or enterprise would have their own unique infrastructure, their own unique use cases. So what I really like about the middle/SMB market is that you actually have very true indications of product market fit. If someone is an owner operator and buying software and what you provide them and sell to them isn't a fit, they'll say no. Or if they adopt it and use it and they don't like it, they're going to churn, and you're going to see that on a month-to-month basis. So you actually have very clear signals of product market fit, and you can see that data change. And that's a great way for you to innovate and move faster because you can understand what features are working, what features aren't working, what people are paying for and what people are not. Versus in enterprise, it's these 1, 2, 3 year cycles that you might be speaking to someone that has a lot of complaints on the other side, but you might not really know like what they're really truly willing to pay for. So it's a bit of back and forth on both sides there. I think that SMBs is a really interesting and overlooked space in financial services. Consumer itself is still challenging in my opinion. It's very competitive, and I'm interested to see what's going to come out next over the next few years.
Yeah, I think that's right. It'll be really interesting to see on the consumer side, and maybe that they're more platform businesses, like more of a B2B to C, right? Type of approach to make the consumer experience better. I think switching gears here, what are, in your opinion, some of the most promising applications of generative AI in fintech either right now or in the near future?
Yeah, the way I look at this are two fronts, and from the view of financial services. So there's cost optimization plays, and then there's also net new revenue generation plays. Most of these businesses that are being built today are on the cost optimization side, whether you're cutting down on workflows or automating workflows and removing manual labor involved in the process. In wealth management, for example, there's a lot of talk about estate planning, and you might have seen Wealth.com raise a large round from Google Ventures recently. Estate planning is an interesting space because traditionally it's very difficult to do. It's very manual. It could take weeks for an advisor to put together a plan and then put it in front of the client and then do the reporting, and that's often late. And then how do you build an estate plan for someone efficiently? And so that is being innovated on, and we're really excited about how wealth is going to play out. Secondly, on the revenue generation side, there's this really cool company called Thea Insights based out of Cambridge. What they're doing is leveraging generative AI to change the game for the GICS classification of public equity. So, global industry classification, it's very generic and not very complex. And what they've built was this granular approach to thematically classify businesses. So, for example, NVIDIA might be classified as a technology company, but maybe you want to break that down into gaming, into cloud computing, into AI. And then what if you enable the creation of new indexes using their technology? Let's say you want to invest in, instead of the S&P 500, but a specific index of just gaming companies or cloud computing or AI companies. And they were able to do that with that technology. And by licensing their tech to exchanges, that enables net new revenue for both the exchange and also for Thea as well. And then the other side that's often talked about in more outside of financial services, but I think it's also very important as well, is on the contact center and also on the fraud side as well. So contact center, there's a proliferation of AI voice agents that you've probably seen announce a lot of raises over the last year or so. Where it's scary is, and there's a lot of benefit there, right? But where it's scary is, what if you're the bank or an enterprise and you're receiving calls from agents that are trying to, take money or steal money from you? There's something called deepfakes, and essentially they're able to take your voice, you put it on to 11 Labs, like a minute of your voice, $5 subscription to 11 Labs, and then copy you that sound exactly just like you, and you can bypass these voice authentication systems. And I think, just going back to where I was saying about going where the puck is going instead of where it's at, I think where it's at already is that voice agents are a thing, and you can replicate voices. In the future, how do you protect your communication channels from these types of deepfake attacks? And so we're really excited about that problem. It's very scary when I could be talking to you right now and I might not even know that it's really Ankur. It could be someone else with your voice, with your face behind that camera there. So it's scary to think about that. And we've seen real life examples of those types of attacks happen. There's a Hong Kong bank that got $25 million stolen from them through a deepfake attack, and elections being impacted by deepfakes and et cetera.
And I think those are great insights. I think you're right. There's a revenue enabling component to some of these applications, and then in other cases it's more about operational efficiency and reducing expenses. And then there are challenges like some of the bad actor problems you're mentioning. I used to work in anti-money laundering using unsupervised learning with a lot of these banks and insurance companies, and the bad actors keep getting better. Except now they have even better tools. And then so the equal challenge on the good hat side, I suppose, is developing software to go and combat the bad actors, right? To go and catch them. So it's a constant cat and mouse game, and it'll be really interesting to see which of these players are able to address some of the new and emerging and soon to be emerging challenges from all the great advances that generative AI has developed. It actually creates huge problems for a lot of these banks. Not just solving problems, it's actually creating new ones that then have to be combated. So I think it's a really phenomenal space to go and see. Based on your experience, I'm very curious when your LPs and some of the enterprises that you work with say no to working with a startup. What do they typically say as the reasons why the startup isn't ready or isn't viable for their needs?
I think it's a great question, and I love to hear your thoughts too, because you've probably spoken to a lot of different types of customers. From our side, it's a lot of it is it's easy for banks to say the stage of a company is too early, and we're still seeing that despite with generative AI, they want to see more evidence of you're finding traction with others, and maybe it's really this like domino effect that we're seeing. And I think it's been true since the beginning and still true today. If one bank decides to adopt the technology, you're going to see that other banks follow along really quickly. But if you're the first to bring in a new idea, they're hesitant if they should be supporting something. Like, why isn't anybody else doing this? Is a question that they ask themselves. So I think that's one of the challenges. The other challenge is if you go into an RFP process and you have other competitors are very similar to each other. Let's say one of those players has the backing of a Microsoft or a Google or someone where there already is a pre-existing relationship, and they say, okay, instead of that company charging for their service, we're gonna roll that up into a big package that it comes essentially for free. And so we've seen that play out before too, where you can have a more compelling product, you can have better experience, but if it becomes as a part of a package or a solution that Microsoft sells, then the bank's going to go with that. That's what we've been seeing as well. What have you been seeing on your side, Ankur?
Yeah, I mean, I think it's interesting. We see similar things, but I will call out a few things. So first, I think you have to be ready to sell to an enterprise and meet them with what their needs are. Typically, you're going to have much more onerous InfoSec considerations, right? Particularly if you do generative AI, they will want this to live on their infrastructure. So we're seeing a little bit of a shift move away from SaaS, even if you have like SOC 2 Type 2 and you have certifications for GDPR and all of these things, you still may have to just go deploy your software on the customer's environment. So typically their virtual private cloud, not so much on-prem or hybrid as much anymore, but in their infrastructure. So if you don't have a means to do that, automatically that's going to be a ding against you. Maybe it kind of ends the process right then and there. And then I think the other big things is the other things that matter are reputation and brand. Have you done similar work for other names that they know of? And if you haven't, there some institutions aren't going to take that flyer because there's just career risk there, right? If they pick the wrong horse and it doesn't work out, that's going to be something that is really going to impact their professional career. Not just waste dollars and time, but also be a ding to their professional career. So getting some of that risk reduced by having success with some of their peers, I think really does matter. And then I think the other things that really are critical is, do you have the right ease of working with their stack, the way that they're set up? And you're absolutely right. Like if you have some distribution advantages by working with some of the larger incumbents that they work with, it could be a hyperscaler, it could be a foundation model company, it could be that you partner and work really well with like a Fiserv or FIS, right? Those existing workbenches, if you could partner and integrate, you've that done natively as much as possible, that's a huge advantage because now it's a package deal versus them having to bring you on as a separate vendor and then try to see if you can kind of go and integrate with all the other vendors that they have in the mix. So the more you can package it up, the more partnerships you have with existing incumbents, the more you de-risk it by showing that you've done similar work with some of the players in their space. All of this really, really helps. The other thing is that I think that you need to be able to show how you differentiate, not just tell, but really show. And sometimes it's hard from them as a buyer, if they have 10 different vendors that more or less look similar, it's just really a hard game for them to choose. So if you could help them make that decision by showcasing why they should go with you versus another, that really, really helps. So, and that comes down to marketing and branding and really clear communication. But sometimes it's like if you have a confusing offering, they can't like pinpoint what makes you different or special. They're just not going to choose you, right? So I think that's another thing that we've seen that you have to get right. There's so many things you have to get right to win. But if you do get more of these things right than not, there is a compounding effect. And I do think it ends up being one where the early winners, if they do a great job, then they continue to win. And then they become the emerging leaders in the categories that they're starting out with, right? So the companies that break out will truly break out from getting that playbook right, and then just rinsing and repeating, as you mentioned earlier.
What's the most frustrating experience working with a large enterprise and like in the selling process? Something that you've experienced in the past that feels they just don't get it. Is there something? Have you had any experiences like that?
Well, yeah, no, I think we have. I think there are some conversations, like you mentioned earlier, where we get in top of funnel. It's easy to get in. We have a really good conversation or two. They're very excited. But then it slows down. And it slows down perhaps because they don't have an immediate use case, or maybe they don't have a champion that they've identified. And so it gets stuck with like what I'd say are the internal scouts. It could be innovation teams, corporate VCs that kind of bring the conversation, but then it doesn't organically move to a meaningful, okay, well, let's talk about where this could be in an active POC or active process. We've also had the opposite where like we have those conversations. It might be many months, and then later they do come back and it's a hot, active RFP. And they have budget, they have a timeline, they're doing comparisons on vendors. Those are the most exciting and interesting. We put a lot of effort at jumping on those opportunities because those are fewer, they come less frequently, but when they do, it is alive. It's a live opportunity at play. Whereas I think there are a lot of opportunities that open up and then they kind of get stuck in the sense like there's nothing that's immediately pulling them. Maybe there's no like urgency element to it. So I think the biggest, most frustrating thing is not being able to get feedback on why things are moving slowly and what you could do differently to potentially help identify areas of opportunity or urgency within the business, right? So, and where we've tried to get around that is, I think, some of the value add that you provide at Illuminate, and something that we've seen with other either investors that we work with or accelerators we work with, which is they can back channel on your behalf. They can go to those teams and say, what did you think of Multimodal or X company? Where do you think they could fit in? What are things that maybe give you pause or excite you? Because all of that back channeling, that feedback is really important. That customer feedback allows you to not only improve the way you're building your product, but also how you market and brand what you do. And that's important. Breaking away from a really noisy space where all these companies are saying similar things, that's a big open challenge for us.
Yeah, I think that we do a lot of that hand-in-hand combat for portfolio companies. One of the partners actually called up the CEO of a bank before to help with the process. So it's very challenging if you're a very early stage startup and you don't have the right relationships to lean on. So really leveraging that and building out your investor base with people that truly can support with the go-to-market process, especially if you're selling enterprise, I think is very critical.
Maybe another question on what you do at Illuminate. Is there a portfolio company right now that you're really excited by that's using generative AI that maybe you could speak to sort of why that opportunity is so exciting for you and what that company's building?
Yeah, I'm not sure when this podcast is going to go out, so it depends on when this goes out and when we announce the deal. But there is a company that does deepfake detection, and we just invested in it. We are so excited by it because we saw the headlines of deepfake attacks happen globally, whether it's a bank getting money stolen from them, whether it's the CEO of a company getting deepfaked and yelling at the internal customer support to get a password, whatever it is. There's a lot of different public use cases, but that's only the tip of the iceberg. We're seeing and hearing more attacks happen, but aren't really getting reported yet because you don't really want those types of attempts known publicly, right? So it's a very exciting space in terms of lots of companies creating generative AI, but not enough companies defending against generative AI. So this company here has been working with a tier one bank, landed them as a production customer. And the ROI is actually quite interesting from what we learned in the process. It's not just about protecting the bank from a $50, $25, $500,000 attack. It's also the brand. It's showing that you're staying ahead of technology, you're staying ahead of the trends, you know where the puck is going. And for that reason, you can build trust with your clients. If your clients see that $25 million have been stolen from the bank, especially if you're a high net worth client, do you feel really comfortable storing your money with that bank there, or do you want to move it somewhere else? It's that ripple effect. And so brand and marketing is really important in ensuring that you're secure against these types of attacks. And the other thing there too is it's with deepfakes, it penetrates all different types of channels. So you might have your own fraud systems in place, but what if there's a deepfake voice audio from WhatsApp that goes through to one of the executives' direct reports, and they're asking to move money around, and you're like, oh, that sounds a lot like the person that I know, and then they send you an email, and then you go on a Zoom call, and that looks like and sounds like the person that I know, but it's actually not, and they approve of the transaction. So it is very pervasive, and there's so much attack surface area that enterprises are exposed to. So we believe that all communication channels should be protected against AI agents, and this company here is going to be able to do that.
That's incredible, Peter. Very excited for that. If that company is announced and the deal is announced publicly by the time that this episode airs, we'll make sure to include that in the show notes. It's been phenomenal having you on the show. For people on the audience that want to learn more about you and Illuminate, where could they find more information?
Yeah, LinkedIn's probably the best place to go. Peter Hung is my name, and so feel free to reach out to me there, or my email is ph@illuminatefinancial.com.
Excellent. Well, we'll make sure to include that in the show notes as well. Really appreciate having you on the show.
Thank you, Ankur. It's great to be here, and I am very excited for where you're going and what you're doing with multimodal, and what you're innovating in the space too. I think we've all heard great things across the industry about what you're working on, and I love how public you're doing and building multimodal as well. So, best of luck, and thanks again for having me on the show.
Thank you for that, Peter. Really appreciate that.